So we want to talk about CAMs. For most of you on this call, CAMs is going to be a new thing for December year ends that have just occurred. One of the clients on the call, I know we have been through CAMs for just the first time last year because we had a accelerated filer with a March year end. So they were our guinea pig to go through that. So I know we can share some results from that. But for the rest of you that this may be new, hopefully it's not an unknown and you're hearing this for the first time today. But we want to quickly walk through what they are, a little bit about why they are, when they're required, what some of the common CAMs have turned out to be, how they're being communicated. And I forgot to remove number 6. I didn't actually put any example in here, but we can point you to a lot of different companies that are out there. I do want to acknowledge a source of a lot of this information. There's actually a very good study that the Center for Audit Quality just put out in December, it's actually about a week ago. It's their year in review paper on critical audit matters. The link is there. As one question was asked already, we'll send the slides out to you and the link will be live, so you'll be able to go right out to that. It's fairly interactive and you'll see some of the information that came out of there. So without further ado, let's just get right into what they are. And so this is probably a strange presentation because this affects us as your auditors, or those of you that are clients. It affects your auditors a little bit more than it does you in the sense that this is an audit standard that we have to apply for companies. So the PCAOB has in their audit standard AS 3101 in reporting, which is a newer standard that's been updated in the last few years. They've defined a critical audit matter as, I'll just read it here, something that arises from the audit of the financial statements that was communicated or required to be communicated to the audit committee and meets these 2 bullets. It's going to relate to accounts or disclosures that are material to the financial statements, and it involves some type of especially challenging, subjective, or complex auditor judgment. So if we think about that for a minute, those of you that have been in audit committee calls, those of you who are on audit committees and you've had presentations by the auditors, there's a whole list of required communications, and you'll know that we get into conversations about accounting methods, accounting estimates, and those types of things. The things that we have talked about traditionally in those meetings, which have been for audit committee ears and eyes only, are going to be now a little bit more potential for the eyes of your investor community, the users of your financial statements. So when we look at the critical audit matters, and if we look at the next slide, just an excerpt out of 3101, it's a lot of small words there. But what they're basically suggesting, requiring the auditor to be looking at when we develop the CAMs that will go into our report, are anywhere, for example, where we have assessment of risk of material misstatement, where there's significant judgment involved because management's created a number of estimates. There's unusual transactions involved in that particular reporting period. There's a lot of subjectivity potentially in the procedures we had to apply that year, or maybe we needed to get some specialized knowledge from business evaluation people or some other things that really will go back and affect estimates as well. The very bottom of that is actually, it is right out of their words. They do expect, the PCAOB that is, that the auditor would determine that there's at least one matter involving some type of challenging, subjective, or complex auditor judgment. So, so I think anybody who's not received an auditor's report with CAMs yet could be expecting to receive one or more. And we'll show you some results from the survey that have come up here in a little bit. So answering the question why on the next slide. Oops. Thank you, Megan. One ahead of me. Okay. So the answer of why on the next slide, the PCAOB put out a release back in June of 2017, leading into this whole revamp of the audit report. And it's been a continuing effort on their part as they've reached out to the investment community. And I'm not exactly who's saying what, but the feeling that's come back through these surveys is the investor community is looking for more information about what's going on in an audit. And when you scroll all the way through this list of bullets here that I lifted out of their release, they did 6 years of public outreach and comment to try to formulate the ideas that people wanted to know more about what's going on in the audit. And the reality is the audit report, but for some cosmetic changes and some mild wording changes over just the last 4 or 5 years, there's only been a handful of minor changes in that audit report since the 1940s. So to some degree, it was looking at a bit stale and dated, and they thought they needed to upgrade a little bit. So when they went through that analysis, quoting right out of there, they thought that CAMs would likely be identified in areas that investors are most interested in, and therefore they're looking at the auditors to supplement the discussion of their audit, much like management's already gone through in the MD&A, but getting a little bit more thought out of what the auditors were thinking or the challenges the auditors were thinking. I know from a soapbox standpoint as auditors, we think it starts giving a little bit more roadmap to potential other auditors to think about how they might, look at that job a little bit differently. But we're all going to be on the same playing field here in terms of what we're disclosing. A critical thing in here, though, is these are not meant to be boilerplate, which I'll stand on a small soapbox here for a moment. I think they are in early stages starting to look boilerplate. So we gotta figure out how to not fall on that. So when they're effective, as on the next slide, as I mentioned early on here today, the large accelerated filers have already been dealing with this. Anybody with a June year end of 19 and since has already been adopting this. And we have one client that went through this last summer with us. Elsewise, all other public companies, with one exception, are required to do this for fiscal years ending after December 15th of 2020. So those of you that are preparing for your audits, upcoming with us or somebody else here in the near term, you are going to have CAMs in there. The one exception being, and I know we have another client on the call that fits in this boat, is if you went public under the Jobs Act and you're still in your emerging growth company status, you get a little bit more of a delay because you're working off your 5-year calendar when you'd have to adopt a number of things. But for the most part, in this filing season, we're going to see a major catch up of the companies all putting CAMs out there through their auditors' reports on their financials. So if we look at the next slide, out of this same survey from the Center for Audit Quality, they went through the S&P 100 and just as their source base to go through. And it's a good little study. I think we've seen other studies during the year that have looked at larger public companies. And I don't think the results are too different in this population versus others. This graph is right in that the source out there. But when you look at it, the top 4 things that they came up with, the common areas for discussion were taxes, income taxes. And a lot of that has to do with some of the major changes in tax laws over the past couple of years. Goodwill and intangibles, again, with valuations, potential for impairments, contingent liabilities, which can run the gamut from litigation to other things, what kind of estimates and judgments would in there. And of course, our old friend revenue recognition would make the list. I'm actually a little surprised revenue is not the top of the list, but revenue certainly is in the top 4. And then that covered 51% or 51 of those 100 companies. The other 49% of the findings fell across some 23 different areas. So there is some other things that are onesie twosies, if you will, that are making it into that. But again, we think about where the judgments, where the estimates, where the complexity is. So those of you looking for CPE online, we're going to actually challenge you and everybody else to answer the first polling question that's out here. How many critical audit matters do you expect your auditor to include in their audit report? And we'll give you a little bit of time to answer that. And Megan can tell me when she gets a good result. We'll put up the answers from this small, rough, non-statistical poll here and see what we think is going on in our local community.
Okay, we're about 74%. So I'll give it about 6 more seconds. You guys are pretty quick. So let's see. Okay.
And the answer is?
Yep, that sounds good. I'm going to share the results.
All right. So out of this fine population we have here, we have 38%, assuming Haskell and white people didn't answer this question, 38% of you in the public reporting community think you're going to have 1 critical audit matter discussed. Next batch of population is 2. So that actually aligns very nicely with the next slide, which will show you that the S&P show that on average there was 198 CAMs across that population, which averaged out to 1.98 CAMs per company. Okay, so we had our own survey come out 1 to 2, and it's just under 2 in this presentation here. So you see 43 out of 100 had 2, 32 had 1, and coincidentally none had none, right? On the idea that there could be 0. And I just one final comment on that before I move off here is the PCAOB does have in their audit standards the possibility that a company might not have a CAM. but they, give you some instances of how that could be, what their thought process on and what it would be. But they also pretty clearly give you a, raised eyebrow kind of look in the wording there that, that'd be really unusual to have none. So I don't personally expect to see companies with zero. So as far as communicating CAMs in the auditor's report, they take various shapes and forms, and from an example standpoint, you could go look at Microsoft, you could look at Apple, you could look at any large company, Ford, GM, et cetera, that's out there, and you'd see the various firms' methodologies for reporting the CAMs. Some have done them with a very bullet point type effect. Some have written full paragraphs. But in all cases, what they've had to do is cover these four boxes here. They've had to identify what the CAM is, the principal considerations to why the auditor thought it was a critical audit matter to be disclosed, how we address that issue in the audit, and then the relevant financial statement accounts or disclosures that are related to that CAM. So if you just think about revenue recognition, there might be some complexity in your revenue model if you're not a simple widget retailer. So we might have to get into what factored the subjectivity, the critical estimates, et cetera, into revenue and talk about what we did to get through that process.
Thank you for watching the clip from our SEC annual update. If you would like to see the full event, click the link in this post.